All right, here we are with the last method of depreciation. We're going to be doing the double declining method, which is, again, a variation of the declining balance method. We're just going to be using the variable of 2. We're going to do it twice as fast. But again, everything's the same TAC, so we don't have to do anything there. We're now going into the 1231 adjustment where we have to do the calculations. Remember, this is the harder difficulty level because it has 3 steps. Not that the 3 steps are harder, but there's one that is challenging. You have to kind of remember. But let's get to it. Step 1 is we need to find the straight line rate. Straight line rate is 1 over the useful life. Now remember, this is double declining method. This is not straight line method times 2. We're not going to do TAC minus salvage value over useful life times 2. That's wrong. We're going to have to do it in these steps. So our useful life here is going to be 5 years. So 1 over 5, that's going to give us a straight line rate of 0.2. Now we're going to take that straight line rate in step 2 and multiply it by our variable or our factor in this situation. Because it's double declining, we're going to multiply it by 2. So straight line rate times 2. If this was triple declining method, then you would multiply it by 3. If this was 1.5 declining level, this would multiply it by 1.5. But because ours is double, we will use 2. So our straight line rate again is 0.20 times 2. That's going to give me a double declining rate of 0.4. Now that we have that number, we're done. We're not going to do step 1 or step 2 anymore because that's a fixed number. Step 3 we have to do annually. So step 3, to find our depreciation per year, we're going to take our book value, which our book value is going to be our TAC minus our accumulated depreciation. So what we have in accumulated depreciation subtracted out of the TAC times the double declining rate that we just found, and that'll give us our depreciation expense for the year. So let's begin with year 1. Now, by the way, just as a side note, if you're ever doing these as an example or practice problems on the side and it asks you to go to like year 2, I would typically say the best idea you're going to get from understanding how to do this is to at least go to year 3, if not 4, if you can. Because you're going to see things that happen in year 1 and year 2 that you could see differently in year 3. And so if you want to get the full picture, at least go to year 3. And I'll show you what we're talking about here in a minute. But let's go to year 1. We're going to take the book value for year 1. Now the book value is, again, TAC minus accumulated depreciation. We have no accumulated depreciation as of year 1. So for us, year 1 will always be whatever the TAC is minus 0 because there is no accumulated depreciation to this point. So 16,000 minus 0 times our 0.4 rate, and that will give us a depreciation expense for year 1 of 6,400. Now again, I'm going to do my table. Year 1, 6,400, accumulated depreciation, 6,400. And then I'm going to put in my journal entry for 1231. Again, that hasn't the accounts haven't changed. Depreciation expense and accumulated depreciation. It's just the numbers. This year we're going to do 6,400. Now we'll go into year 2. Book value. Well, the book value for year 2 is going to be 16,000 TAC minus the 6,400 that we have. Now notice, this is not the 6,400 under depreciation expense. This is the 6,400 under accumulated depreciation if you're drawing it from the table. I don't want you to use the wrong number because, yes, they are the same number. They're both 6,400, but later on in the next year, you'll see that they're going to be different. So if I subtract 16,000 minus 6,400 and multiply that by 0.4, that will give me a depreciation expense for this year of 3,840. Add that to my table, year 2, 3,840. Add the 3,840 to the existing 6,400 for accumulated depreciation. That will give me 10,240. And I will do my journal entry. Depreciation expense again of 3,840 and accumulated depreciation of 3,840. All right, let's look at year 3. Year 3 is going to be 16,000 minus our accumulated depreciation of 10,240. This is why I said go to at least year 3, because the 6,400 you could look at and go, oh, what's either depreciation expense or accumulated depreciation? But that's not the case. It's always the one coming from the accumulated depreciation. So times the 0.4, that will give me 2,304. Put that in my table, 2,304. Add that to the existing 10,240. That'll give me 12,544. Notice, nowhere on here have we done any kind of calculation for depreciable base. This method does not start with TAC minus salvage value. So, but we need to have that in the back of our minds. it's still going to be there. Our TAC is 16,000. Our salvage value is 4,000. That means we cannot go over 12,000. And if we go with this right here with the 2304, that means that we have gone over the 12,000, and we can't do that. Again, why? Because the depreciable base, TAC minus salvage value. So we have 16,000 minus the 4,000, and that would give us 12,000. We cannot go over that number. So how do we bring 12,544 down to 12,000? We subtract out 544. And in order to subtract out 544 from the accumulated depreciation, we have to subtract out 544 under the depreciation expense. That would give me the 12,000, which means that for year 3, our depreciation expense needs to be 1,760. So again, our journal entry would be depreciation expense of 1,760 and accumulated depreciation of 1,760. Okay, notice that we hit our accumulated depreciation, we hit our depreciable base way earlier than the 5 years. And that does happen depending on the useful life and the salvage value within the problem. It could happen early, it could happen in the last year. But it's pretty typical when you're dealing with declining balance method. But just for formality reasons, if we're going to do year 4 is going to be 0 because we've already hit the 12,000. So there's nothing else we can do. 0 is still going to be 12,000. There's going to be no entry for year 4. And then year 5, same thing, 0, filling out our table, 0, 12,000, no entry. So again, that's pretty typical when it comes to declining balance method. But please, please, please make sure you do that side calculation for your depreciable base because you do not want to go over that amount. But that is how you do the double declining balance method. Hopefully it made sense. Y'all have a good one.